Good evening, all. Ira Epstein, and here we are on Thursday night, the 26th of October, 2023, and I'm late at 7:20. We're doing so much in the office here, it's crazy. You know, we're building an AI system, and it's based on momentum in the markets, and we are now spending hours every day building this thing. It won't be ready this year, but it will be ready probably early next year, and it'll be a big part of what I do going forward. I think it's going to be a lot of fun, and it will be used in the futures markets and ETF stock markets, both. So it's a lot of work that we're doing. But back to the basics. You know, the UAW has now settled, at least with Ford. It depends how the members vote on it, but if the UAW says vote positive, they're going to vote positive. The cost per car, from what I've just heard Mr. Farley talk about there, about $850 a car. How's that going to be absorbed? Where's the profit margin on that? So according to Ford, what they have to do is find ways to save costs. They're going to back off on their electric vehicle, running at it as fast as they did. They're going to go there, but it'll take longer. They're still going to commit that, I think it's $12 billion, but instead of doing that, let's say in a 3-4 year period, it might be a 6-7 year period. And what they've come up with, and this is why I'm leading you to it, you get to a price on some goods where, yes, the well-to-do, the well-heeled can afford it, but when you go down to the mass, do they really need an electric car? And the answer Ford has given you is no. The prices are too much money over the ICE or a hybrid to make it for everybody just yet. Now, there's one guy out there that might be able to break that myth. What's his name? Starts with an M. Sounds like a Tusk. Oh, Musk. Will he be able to do what he says and develop a real car for the masses in the $20,000, $30,000 range, fully electric, that makes sense? A car like that, folks, doesn't need 300-mile range. You develop an electric car for the city, 150 miles, you plug it in at night, next day, whatever. How many miles are you driving in a city car? Come on. If you're going to have that car and you're going to drive it across country, I don't know that makes sense. It might not, but we'll see. All right, that's part of it. But that's what we're looking at. The other thing, you're looking at traders getting nervous. The NASDAQ went under the 200-day moving average. Now, it's bouncing away from it tonight, but that scares traders. You went back to those early October lows, you exceeded them. Are you going to snap right back? That's going to be an interesting question. We saw the third quarter GDP, 4.9%. Whoa. So I don't know what we're going to hear from the Fed chair, but he didn't want to see that. I'm sure he didn't want to see new home sales as strong as they've been. So that flies in the face of all the high mortgages. So what is he going to say? Could say it's an anomaly. Could say that what happened in the third quarter, people were just sitting back there. They were tired of not going on vacations. They flew. I think we all hit that point. They were buying. They still had money in their pocket. They feel good, and that's over. We'll find out. But the one thing it didn't do, it didn't take the Fed to, hey, we're getting close to being over with raising rates. No. It opened their eyes. Maybe we have to go higher again. That's what happened. And if you saw Ms. Lagarde from the ECB, she made that ultra clear. While they held today, their eyes are on what's inflation doing, what's going on. You got to. This has not been a market that anybody, the analysts, have gotten right. I hope you appreciate that because they haven't. So you had the bounce off the lower Bollinger Band. You came up for the correction, and now you're back down. You're in the toilet. It's that simple. You want to call it anything you want, fine, but ring the bell. You're in the toilet. And this market since August has gone from 4,700 and you're now at 4,172. That's a big bear break. That puts the market, for many people, in the bear territory. So be careful. We're getting close to it. Look at how you're straight down on the swing lines. The market's got a bearish crossover today. I was watching it, and that's what I said to myself. If you were talking to me, I'd say, you got a bearish crossover. You're going lower today. And you kept going lower right into the close. Other traders see those things. You're riding the lower Bollinger Band or trying to. You don't have a Gorilla Glue trade yet. Every day you got to do that for another day or two of hitting that band. Then we can get that. And you have to embed to tell me there's going to be another leg down. If you get that leg, you generally, when you get it like that, you do make those lower lows. But often you get right down into the oversold area like this and the market tries to bounce. Is there anything bullish on the chart other than it being oversold? No. We then get to the NASDAQ. Here's the 200-day average. So traders are saying it's under it. Well, it's not under it. It's back over it. It's fighting its battle at the combination of a Bollinger Band and that. Take the name of the chart off. If you've watched me for any length of time, you will hear me say over and over, when you get a Bollinger Band together with a major moving average, it is, be it on the long side, if the market were going up and these numbers were up there, or on the downside as they are here, I believe that algorithm traders do a massive amount of short covering. I didn't say going long, short covering. In the Dow, you're oversold, riding or keep bouncing away, but going lower into the Bollinger Band. Again, we're very close to those early October lows with one exception that is still bearish, and that is in the Russell. The Russell, to me, is the weakest of all the markets. It is the one that needs interest rates to break the most or stop going up, and you think they're really not going higher in order for it to come to life. It hasn't done it yet. Everybody that has said, let's go in there, these stocks are cheap. They're right, they are cheap, and they're going to be cheaper as long as interest rates keep going up. And that's where you start looking at the 10-year note. And what we have here is a bounce in an overall bear market. Overall, because it's staying under the 18-day average, it runs the Bollinger Band, gets away from it on corrections, and then comes back and hits it with new lows. That's what interest rates have been doing. They'll make a new high, they back off a little bit, and then they run again. We saw that. Didn't we just see it happen when Bill Gross and Bill Ackman came out and they said, oh, the geopolitics are so much we don't want to be short anymore. You were at 5%, and the market fell back into the low 4.8s. Doesn't mean the trend is over. It was just how it worked. 5-year notes, same thing. An overall bearish market, bearish bias. I can't imagine what would keep the market bullish, but I imagine there's something out there. I don't see it. In the dollar, whipsaw city. Upper band to the neutral area, the 18-day average, where you often try to figure out what next. You went to the lower band where I teach. You're not embedded. Pros are covering. Go up today to the upper band, not embedded. I think they're covering if they're long. But how do you get long or short other than throwing a dart at a price? It doesn't make sense. Same thing now in the euro. When it got up here, I was here saying to you, I don't think the euro is going to stay up. Well, it didn't. Got to 107. It's quickly back to 105.81. You're getting these swings of waves of money going in and out that don't make sense when you're caught in these Bollinger Bands this way. Eventually, this sideways action will give us a trend to trade. It will happen. Be patient with it. Let it develop. In the British pound, it's sort of the same thing. We're going to hear now from the Bank of England, and they've got to make their decision. I don't see them raising rates. I think that they'll sort of sit here and be dovish, the way that we saw the European Central Bank. I could be wrong, but that's what I think. Then we come, and I did say to you 2 days ago now that I thought the pros should take money off the table in this chart, and that's what I said in my morning subscriber video 2 days ago. I said, you've taken this market to the point, and this is all I'm saying, where the market's built in that you're getting the ETFs that are going to be spot-based. Let the market pull back, and then you take another look. But how many times are you going to keep discounting the same news that hasn't happened yet? That's the problem. So you put it all together, you come up with game plans. Well, what's going on in Brent? The world has a shortage of oil. If you look at the world stocks, with the cutbacks that Russia and Saudi Arabia did, the stocks are low. We're not out of oil, the stocks are low. That's what it really is. You're fighting a battle here. You had your run, and you're not going anywhere. And so far, the worst event from the situation with Gaza hasn't caused anybody to stop selling oil worldwide. That's very important, or producing it. It could. I don't know where this thing's going to carry things, but you're pretty neutral in the market right here, and the same's very much true in the WTI. So we come to heating oil, warning sign. This is the time of year you would say it's getting cold and heating oil normally goes up. Normally, you start breaking. From here into the end of the year, there's tax moves and so on, and from what the refineries do. It hasn't shown itself yet, but I'm on the lookout for it because I trade this and look at it. I don't trade it, but I make recommendations in it. And yes, if I want to put my own money, I will, but I look at it and we'll see what goes on. Then we get into the natural gas. Well, you made a higher high here. I'm looking for a top in nat gas. So I think this rally is going to set it up. I'd be getting the money ready to go short this market. Pretty simple. I'm Ira Epstein. I want to remind you that each morning, how I start out most of our traders is with our morning subscriber videos. And on those videos, I'll cover 40 charts in futures, and I'll cover 40 charts in the ETFs. If you want to find out where to do, how to get involved in it, it's simple. Just go to iraepstein.com. And when you get there, all you need to do is go to the research area. Now, I'm moving my finger here because there'll be an icon up here. Give it a click. It'll take you there into the research and take a look at what we do. I think you'll find it fascinating. I'm Ira. You have a good day.